First of all, I would say a lot of people really want to be here, whether or not it is the best move. I mean, this thirst for income has been going on for 10 years. Now, finally, the market has given us a few decent options. I also think that at scary times, people do go for these sort of income plays. You've seen that move in utilities, and we're thinking maybe that's a little overplayed right now. So where else can we look? And MLPs are at the top of our list.
Okay, so let's talk about some of those MLPs.
Sure.
Who's at the top of your list?
So first, I have to do a mea culpa. I think I sat here almost a year ago and said MLPs looked great.
Right.
They look a lot better now. So the one that we name is EPD, Enterprise Partners. That's sort of in the class of the operation. Then we also give a couple of funds. They do have leverage, so you know there's a little bit of danger there. But it's really tasty yields around 9%. I think the key is, and Barron's has been really tough on the MLPs. I mean, Andrew Barry broke the story about Lynn. He was tough on Kinder Morgan. We got all sorts of hate mail from people who love those that income. But now, you know, they've become a lot more disciplined. They can actually afford those payouts. Right. They're showing organic growth instead of just borrowing to grow. And so we think this might be a good time to get in. That's not to say they couldn't dip a little farther.
I want to ask you about a classic traditional payer, AT&T, in the telecom space. They have a huge amount of debt at this point in the ballgame. A, do you think they're going to be able to pay it off? Do you think the dividend comes down? What do you think is going to happen here?
I would be lying to you if I said that I'm in complete agreement with Jack Howe and Andrew Barry. You know, great colleagues, know a lot more about the market than I do. They're positive on AT&T. That debt scares me. If interest rates tick up and stuff starts rolling over at higher rates, I mean, if Reed Hastings, I don't know, John Malone and Bob Iger teamed up to run that conglomerate of assets, I might feel more comfortable. But every single thing that AT&T owns is
that a commentary on Randall, then?
Well, I don't think anybody. How can anybody take all of those disparate elements in all of those industries that are so disrupted right now, plus pay off $180 billion in debt? I mean, the pro argument is they've got enormous cash flow.
Huge cash flow.
You know, look, all of us are helping them pay off that debt. So, but whenever the market gives you 6.9% yield in this kind of an interest rate environment, you have to be worried, and I'm worried. I would rather play a safer play like Verizon or own a basket of them. I mean, you look at Deutsche Telekom, you look at BCE, they're all paying tasty yields. So if I were going to go into telecom, that's how I would do it, with a basket. And then if AT&T blows up, I'm covered with the others.
It was up on 6.3% today, but because I think it was up on Friday. There were some upgrades too, I think. There was a
Greg Moffett, who's been a longtime bear. So look,
Comcast,
Barry, Howe, and Moffett, I don't like to argue with them, but the 180 billion.
You should never come on and say I was wrong a year ago on something. We would have never brought that up. You are not a sell-side guy.
You got to get completely honest.
That's unbelievable.
That is a hallmark of Barron's. Every year we publish, you know, what we got right, what we got wrong.
But I didn't remember. Did you remember?
I didn't. Just real quick, utilities.
Utilities, that's what I think so many people have flooded into utilities because they're scared. I would avoid that now. Wait until the market gets happy and, you know, we have 6 more 800-point up days. Utilities will be cheaper.